Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. This is take two. Apologies for the earlier audio issues. Let's get started. Markets are generally down today, slightly. Dow Jones down 0.4%, Nasdaq down 0.4%, S&P 500 down 0.4%. Russell 2000 is actually in the positive now. Oil is at $64 per barrel, rising slightly. Wow, Treasury yield. 5-year Treasury yield is up 5 basis points today. 10-year Treasury yield is up 4 basis points. 30-year is at 4.92. Bit of a flattening going on. Initial claims came in a little higher than expected today, but not so much. Continuing claims are still right under 2 million. Philadelphia Fed Index was lower than expected. These are August data points. S&P Global U.S. Manufacturing PMI and S&P Global U.S. Services PMI preliminary reading came in better than expected. Existing home sales were also better, but that's for July. On the heat map, we see that Walmart is down 5%, Costco is down 2.5%, healthcare is up, everything else is generally down. And let's move on to the article. Wall Street slips as Jackson Hole event looms. Walmart stumbles. Is this working? Wall Street's main indices slipped on Thursday as cautious investors awaited clues on monetary policy from a Federal Reserve conference in Jackson Hole, while big box retailer Walmart's quarterly results did little to boost sentiment. Walmart raised its fiscal year sales profit, driven by strong demand from shoppers across all income levels, but missed quarterly profit expectations and flagged higher costs from tariffs. A labor market report on Thursday showed signs of a slowdown. I think that's a stretch. They're referring to the initial claims report, but it's still pretty expansionary. While a private report indicated business activity picked up pace in August, reflecting a complex environment for the central bank that has to deliver its verdict on rate cuts next month. All eyes are now on the Fed's annual symposium, where Chair Jerome Powell is scheduled to speak on Friday at 10 a.m. Eastern. Traders will closely monitor Powell's speech for any clues on interest rate cuts in September following recent job market weaknesses. Investors are looking for assurance from Powell that a rate cut is likely at the September meeting in order to help prevent any further weakening of the labor market, said Rick Gardner, Chief Investment Officer at RJ Investments. Multiple policymakers, including Cleveland Fed President Beth Hammack, Atlanta President Raphael Bostic, and Kansas City Fed President Jeffrey Schmidt have struck a cautious tone and acknowledged the need to stay data dependent. Traders have pared down their expectations for a 25 basis point interest rate cut in September to 79% from 99.9% last week, according to data compiled by LSEG. A sell-off in technology stocks earlier this week appeared to subside, with technology-related stocks such as Meta, Amazon.com, and Advanced Micro Devices marginally lower. The sell-off signaled investor fears that the equities, which have soared since April lows, are now overvalued, while Washington's growing interference in the sector has also raised alarms. Among other market movers, Coty slumped 20% after the beauty products maker forecast a drop in current quarter sales on weak U.S. spending. In trade developments, the U.S. and the European Union on Thursday finalized a framework deal they reached last month. Let's dig into the PMI activity for a bit, because I think these numbers were important that came out today. U.S. business activity picks up in August. Factors lead the way, survey says. U.S. business activity picked up pace in August, led by resurgent manufacturing sector that saw the strongest growth in orders in 18 months, a Purchasing Managers survey showed on Thursday. S&P Global's Flash U.S. Composite PMI Output Index, which tracks the manufacturing and services sectors, increased to 55.4 this month, the highest level since December from 55.1 in July. A reading above 50 indicates expansion in the private sector. Quote, a strong flash PMI reading for August adds to signs that U.S. businesses have enjoyed a strong third quarter so far, Chris Williamson, chief business economist for S&P Global Market Intelligence, said in a statement. The data are consistent with the economy expanding at a 2.5% annualized rate, up from the average 1.3% expansion seen over the first 2 quarters of the year. The improvement came largely from the manufacturing sector, where the flash PMI surged to 53.3, the highest since May 2022 from 49.8 in July, defying an economist's expectations for a second month of contraction. Manufacturing received a bump from new order activity at the highest since February 2024. The services sector, meanwhile, eased back to 55.4 from 55.7 in July. The survey's measure of prices paid by businesses for inputs edged to a 3-month high of 62.3 from 61.3 last month, with both the services and manufacturing sectors reporting higher costs and companies citing President Donald Trump's tariffs as a key driver behind the increase. The key driver. Quote, companies across both manufacturing and services sectors collectively reported the steepest rise in input prices since May and the second largest increase since January 2023, the report said. Rates of increase accelerated in both sectors. The survey's measure of prices charged by businesses for goods and services rose to a 3-year high of 59.3 in an indication that the companies are increasingly passing along the costs from higher tariffs to consumers. Employment also improved, the survey showed. The composite employment index for both manufacturing and services rose to 52.8, the highest since January, from 51.5 in July. Okay. Tesla's reign as Europe's top-selling EV maker is over. This is an Inside EVs article. The numbers are in, and it's not looking for good for Tesla in Europe. After the first 6 months of the year, the American electric car maker has recorded a steep 33% drop in sales in the European Union, EFTA markets, and the United Kingdom, according to preliminary sales figures from Dataforce. I'm going to summarize this here. Volkswagen is growing very fast, 78% year-over-year increase. Okay, and it's really pulled away from Tesla. Volkswagen 133,000, Tesla is at 109,000 now. And if you scroll down to this list right here, best-selling EV companies in Europe in the first half of 2025, you can see again Volkswagen literally leaped ahead of Tesla. And BMW is really not that far away from Tesla. So Tesla is at risk of becoming number 3 in Europe. All right. The best-selling EVs in Europe from January to June were Tesla Model Y, Tesla Model 3, Volkswagen ID4, Volkswagen ID7, and Volkswagen ID3. Overall market increased 24% year over year. All right. Let's move on to this interesting article. GM, I think, is an underappreciated company in this area. So let's read about this article a little bit more. GM raided Silicon Valley to build its new AI team. Here's what it's doing. GM Executive Director of AI Research, John Anderson, left, and Barak Turovsky, GM's Chief AI Officer, are part of the automaker's AI Center of Excellence. Sorry, left is left of this picture right here. So this is the Executive Director of AI Research, John Anderson, and this is Barak Turovsky, I guess. Part of the automaker's AI Center of Excellence. GM's top software engineering executive, one sec. Oh, man, okay. GM's top software engineering executive David Richardson says the automaker isn't trying to be Apple or Google. Its latest hiring spree might suggest otherwise. In the last 8 months, GM has made nearly a dozen hires from top tech companies, from Google to Meta to AWS, with the aim of building a small but elite AI center of excellence, much of it based in Mountain View, California. And the rest of the article talks about how this elite team is helping GM across many departments. So it's not just about autonomous driving. It's also manufacturing, sales, distribution, etc. And as well as finance and HR. So I thought that was an interesting article. Highly recommend, if you have a Wall Street Journal subscription, I highly recommend reading the full article. Walmart stock falls after earnings. Profit outlook misses forecasts as U.S. sales growth accelerates. Walmart stock fell more than 4% early Thursday after the company reported second quarter earnings shy of expectations, while U.S. sales growth topped forecasts. The big box retailer's low price strategy drew consumers as tariff-related uncertainty pushed them to more carefully scrutinize their household budgets. With regards to our U.S. pricing decisions, given tariff-related cost pressures, we're doing what we said we would do, the CEO said. We're keeping our prices as low as we can for as long as we can. As it relates to what we're experiencing with customers and members here in the US, their behavior has been generally consistent. We aren't seeing dramatic shifts. Okay. I'm going to summarize the article. Same store sales grew 4.6%. Sam's Club grew 5.9%, both above expectations. But the reason why the stock is down 5% is because they missed on the adjusted earnings per share. So there's some margin pressure. I think the revenue came in better than expected. And I think full year company expectations was the midpoint is below street expectation. Okay. Um, Walmart called out strength in its grocery and healthcare and wellness categories, driving its US sales growth. The company saw share gains across income brackets, led by upper income households in its US stores. And I've seen people comment on this saying, well, look, if the upper income households are shopping at Walmart, that could be an issue for US consumer. But I think that might be jumping to conclusions. By category, the company saw grocery sales rise by mid single digits in the US stores, while the health and wellness category saw sales rise by a mid teens percentage. Around 60% of US sales are groceries, which are largely tariff exempt if they're produced domestically or in Mexico and Canada. Now, this is a key difference between Walmart and Target. Walmart has heavy grocery sales, Target does not. Okay. And when you think about it, groceries are a bit more recession proof than discretionary items. Trump tariffs live updates. US and EU agree on a written trade framework. The US and EU established a written framework on Thursday for the trade deal agreed to on July 27. The terms include a 15% US tariff on most EU imports. These include autos, pharmaceutical goods, semiconductors, and lumber, but not wine and spirits. The two sides also outlined the EU's promise to remove tariffs on US industrial goods and give better access to US seafood and agricultural products. On Wednesday, US Treasurer Scott Bessent said US is content with its current tariff setup in China, signaling the Trump administration wants stability ahead of the November trade truce deadline. In a Fox News interview, Bessent said the status quo is working pretty well and called China the biggest source of tariff revenue. Bessent went on to add in a further interview with CNBC that he expects tariff revenues under President Trump to exceed his earlier $300 billion estimate, with the money going to pay down the federal debt rather than rebate checks for Americans. Earlier this week, S&P Global Ratings affirmed the U.S.'s AA plus long-term credit rating. The agency's view comes despite Trump's sweeping tariffs, which have rattled markets and strained trade ties. Earlier this month, Trump unveiled reciprocal tariffs on dozens of U.S. trade partners, which you can see in the graphic below. Tariffs are giving parents back to school sticker shock. I think we're going to see the same story around Christmas as well, or holiday spending. KC Feds, Kansas City Feds Schmidt wary of September rate cut, notes very consequential data in the coming weeks. Kansas City Fed President Jeffrey Schmidt said on Thursday the August jobs report due on September 5 will be very consequential in shaping the central bank's next move. I think the data coming between now and September meeting is going to be very consequential. So if we do see patterns and a risk to the labor market itself, I think we'll start to consider and weigh inflation data to the labor data. Schmidt described the Fed's current monetary policy stance as modestly restrictive. For 4 years, inflation has been persistently above the Fed's 2% target, and recent data suggests it might now be rising further. At the same time, the growing evidence indicates a weakening labor market, with the July jobs report pushing markets to anticipate that the Fed will begin cutting rates next month. Schmidt's comments on Thursday suggest the risks on the Fed's mandates remain more tilted toward inflation remaining too high rather than the labor market softening aggressively. With investors all but certain that the Fed will cut rates in the coming weeks, and with pressures building on the Fed politically to begin a rate cutting cycle, this view appears to put Schmidt among a dwindling number of Fed officials still focused on inflation pressures. I don't think dwindling is the right word here. I think still majority are concerned more about inflation than labor. Quote, I think we're seeing and hearing, more importantly in the Kansas City Fed's district, that some of the risk of inflation is higher than maybe seeing some of the labor numbers come back into line, Schmidt said. Last week's CPI report showed that while headline inflation was lower than consensus forecasts, on a core basis, prices rose more than expected. The producer price index, a read on wholesale prices, also showed inflation pressures building. The July jobs report showed the hiring slowed last month, while over 250,000 jobs additions were revised away from May and June data. We have a lot of things in balance right now in the economy, in my opinion, Shivan said. And I'm just trying to be very careful to not try and do too much. That will create an imbalance. Fed Chair Jay Powell is set to speak in Jackson Hole on Friday in what is expected to be his signature policy speech of the year and his last at the symposium as Fed Chair. Bostic still sees one 2025 rate cut, but watching labor. Fed Reserve Bank of Atlanta President Raphael Bostic said he still sees just one interest rate cut as appropriate for this year, but added the labor market trajectory is potentially troubling and bears watching. All right, we're going to keep it there. Thank you very much, everybody. And I will chat with you all next time. Take care.